Hello traders, the title of the video is Elliott Wave Analysis, Secret of Elliott Wave Cycle Revealed, Part 1. Alright, so recently I have posted a series of videos that are titled The Secret of the Motive Wave. There was a very interesting comment. It was that, George, where is the secret? Or what is the secret here? So a trader did not see any secret there. Probably that trader already know, but what we were calling a secret. A secret, generally speaking, is something that is new to a person, all right? So you don't know about it before. It is a secret to you personally. It may not be a secret to somebody else, but it is your own secret, all right? So I need to clarify that. So before we begin this discussion, talking about secret of Elliott Wave Cycle Reveal Part 1. Another thing that I want to add to traders is that one may know a secret. So you may say, George, I know that secret. You are not sharing anything new. The question is, have you been using that secret to pull something out of this messy financial market? If you know the secret, but you are not using it, it is a secret to you now that you must, use it, all right? Have I started getting your attention? Do you promise me that you will watch the full length of this video with your favorite drink? Very good, thank you. Let's start. I want to drink my favorite tea here. Very good. Elliott Wave Analysis, Secret of Elliott Wave Cycle, Revealed, Part 1. So I want to break it down a bit. This video can be up to 20 minutes, maximum 30 minutes. Very important. I need to tell traders before we start. So the secret of Elliott Wave Cycle. The Elliott Wave Cycle is formed of the trending phase and the corrective phase. The motive wave plus the correction will form the Elliott Wave Cycle. If one is trading or investing in the financial market and one does not try to master the market cycle or the Elliott Wave Cycle, one can make wrong market timing. You remember the last time, you know that the financial instrument is going to go up, but you time the market wrongly and probably you have lost money. The timing is very important. And one of the tools that can help you to avoid trading mistakes or to time the market accurately is the Elliott Wave Cycle. All right. So talking about the secret of the Elliott Wave Cycle, the motive wave is subdivided into 5. Now, I want to go back a bit, all right? Go back a bit to the motive wave. We were saying to trader when I was recording those videos, the motive wave when we come 1, 2, 3, 4, 5 in one direction, either horizontally or in a rising channel or in a declining channel. The key point is that there is a high chance that we may have a market pattern rotation. That was the key point. If there is no market rotation after the 1, 2, 3, 4, 5, there's nothing there. Again, with the Elliott Wave Cycle, we have 1, 2, 3, 4, 5, followed by the correction. 1, 2, 3, 5 plus 3 equal how much? 8. So, in the financial market, the number 8 represents the cycle. Do you know that before? If you say no, therefore, if you say no, then it is a secret to you. 8 is a secret number in the financial market. You may disagree with me, and I'll say to you that's fine. This is what usually takes place when somebody for the first time discovers something or come across something for the first time. We tend to disagree because it doesn't make any sense to us. We may call it a mambo jumbo or something like this. 8 is a very important point, number when we are talking about cycle. That's why I use, you will see also, the stochastic 833 work beautifully with the stochastic trading to detect the best divergences. Something to do with that secret number 8. That was also the reason when I was writing the TSTWSY S008 or 08 is down to a cycle. Alright? Cycle. There are many ways that we can find a cycle. Traders use moving average crossover, specific moving averages crossover to determine a cycle. Traders use the Elliott wave cycle. There are other cycles in the market. All right? A cycle can also be a pattern. For example, all right, we're talking about the cycle point. You remember that? When the financial instrument goes up like this, all right, and pull back to the starting point. So prior returning to the cycle point, people say it is the cycle is completed. Another trader may say, George, you know nothing. This is not a cycle. A cycle is like this, George. When the financial instrument starts from here, goes up, and then come back down below that point before returning to the starting point. That's what I'm saying to you when we are talking about cycle. We are also talking about a pattern that is completed. The specific time. A cycle has a duration and also a structure. And those are the things that we are paying attention to. So the number 8, talking about the Elliott wave cycle, is crucial. It's a very important number in the financial market. All right? Very, 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 very important. All right? The moving average 8 GSTW 24 traders, you remember? Moving average 8 is a very, very important moving average. You can quote me on that. All right? So the Elliott wave cycle, we can 1, 2, 3, 4, 5, generally speaking, multi-wave, subdivided into 5 distinctive manner wave, followed by the correction 1, 2, 3. Not all corrective waves are formed of 3 components, all right? But generally, in theory, the number 3 represents the corrective waves. Can be WXY wave. So WXY wave is 3 waves with one connector, the X wave, the W corrective wave, plus the S wave, plus the Y wave. 3 waves, 3 segments, all right? 3 segments, 3. Not in a sense of, not always, I'm choosing my word carefully, not always in the sense of 1, 2, 3, but in the sense of corrective wave, or in the sense of 3 components. All right, so here I need to dwell on that a bit. All right, some traders already know what I'm talking about, they understood it. I want to dwell on it for new today. 1, okay, 2, 3. In that sense, that's true. And also 3 as a 3 components. Also 3 as a corrective wave. So, all right. So, whenever we see a trending phase plus 1, 2, 3 price move down or up in the opposite direction, we may say that there will be a reversal or a cycle or a mini cycle. It may not be the full cycle, it may be a portion of the cycle, or a mini cycle is completed. You may say to me, George, I completely disagree because it does not make any sense. The question is, practically speaking, can we use that deduction to make excellent decisions? Can we use that deduction, all right, to improve technical analysis, to time the market more accurately. Yes, the good news is this: a lot of trading algorithms, trading software are using what I'm sharing with you today, talking about the secret of Elliott wave cycle. You want to create a software, all right? You want to have an algorithm. Do we use numbers? They use numbers. That's why I was recording that video about the secret of the multi-way. It's because nowadays it's no more human beings that are taking the trading software are taking the decision. So one can create a software counting ways. So you say 1, 2, 3, 4, 5 in one direction. That will be one condition for your software. All right? And then you say, if there is a violation of that market pattern, well, take the other side of the train or cross the train. That can be a formula one can use to build a trading algorithm or a trading software. All right? Though you as a human being, it can be a difficult task to go around country way, but for trading software, trading algorithm, we can write those ones and use them in the financial market to a trade, talking about automatic trading. That's why I'm sharing this information about 1, 2, 3, 4, 5, 1, 2, 3, 8. All right, 3 as 1, 2, 3, 3 as a component. So we can set different conditions when we are writing a software or building a trading algorithm. Segments, 3 segments. All right, 1, 2, 3, 4, 5 in one direction. Market rotation took place. That market rotation is followed by 3 segments or 3 price moves. We will call it either a cycle, practically speaking, to time the market, to improve our market timing. All right? Am I getting you interested in this subject? If yes, that's what I'm trying to do here. I'm a happy person. All right? So if you look on this chart now, okay, we're going to start applying what we are discussing here about the secret of Elliott wave cycle. The key point to remember: 8, whether 8 segment or 8 structure, all right, 8 component, 5 in one direction, 3 other component in the opposite direction. That's what we do care about. Those conditions are very important. Okay, so suppose you are here. You see, George doesn't want to move up, so you are a trading software, you are trading algorithm. All right, your function is to count things and to make decisions automatically, as is happening today in the first. So you end up with pullback. So say 2, say 3. So the trading algorithm are doing this. Can I show you? 4, 5. So now you are here. So you count 1, 2, 3, 4, 5. Say wow. So it's looking at this section here. Is there free? No, it's not free. It's only 1. So what the software can deduct from this? So we can build that software. Say, if we see 1, 2, 3, 4, 5, one direction, and the following move does not have 3 components, what can we deduct? We will deduct that there will be a continuation. If we count 1, 2, 3, 4, 5, one direction, followed by 3 move down, or 3 move up, or 3 component, or 3 segment in the other direction, we will expect a reversal, or we will assume that a cycle or a mini cycle is formed, practically speaking. So the software who is counting like 1, 2, 3, 4, 5, say, okay, we're looking for 3, no 3 was in place, therefore continuation. All right. So we can keep doing that. So if we ignore this section here, we call it, we are human beings, we say this is a corrective, we say 1, 2, 3, and you call this, because it's a correction here. You remember what I'm saying to you? 3 as a correction. 3 as 1 plus 1 plus 1. 3 as a 3 component, 3 for Elliott wave cycle correction. So you see, move up, correction, move up, all this correction. All right, so that way 1, 2, 3, 4. So all this correction, that's 4. 5. Okay, now you go, here it is, come down. All right, so 5 move in one direction is changing direction. Is this free? No. What we will deduct, we are trading algorithm, we'll deduct that there will be a continuation. Yeah, all right, if the price goes above the price high here. Is it making sense? But the point I want to make to area weight traders, because we understand the area weight structure, we can validate area weight count, we can recognize area weight pattern. I have done my area weight count before for this stock, Merck & Co., belonging to the healthcare sector. This is an American stock, Epic MRK, Mike Romeo Kilo. So we will say we know first wave, second wave, all right? Are you with me? All right, then move up, 5 moves. So I'm not going to do well. Is it correct? 1, correction. So say 1, 2. So here, so this scenario we cycle again. Trend in first, correction. The 2 vertical lines, cycle completed. So now we come first wave, second wave. The third wave have been subdivided into 5, fourth wave, and the 5th wave. All right, so this is a 1, 2, all these 3, pink 1, 4, and 5. All right. So because you are an area weight trader, you know the pattern, you are counting it. Though we have more than 5 moves here, you recognize 5 distinctive area waves. The third wave has been subdivided into 5 manual waves, and now this is the 5th wave here. So you see all this from here, 5. You call it 5. Now here it comes, 1, 2, 3. At this point in time, you'll be saying that an area weight mini cycle, practically speaking, to improve market timing, is in place. Possibility that we may see the price bouncing up. Now, if the price bounces up, you as an area weight trader, if it's not an impulse wave, it's again 1, 2, 3, you'll be thinking of a correction. Again, talking about free as a corrective wave or free as a 3 component. You count it from here, 1, 2, 3, 4, 5. Yes or no? We did that. And now you see again, 1 component is this one. Which one? Price went down. 1, 2, 3. So this is what we are talking about. 1, 2, 3. You see, 1 component is completed. 1, 2, 3. All right. Second component is completed. Price. So we call 1, 2, 3, 4, 5. 3 move down. 1 component. 1, 2, 3. Second component is completed. All right. Now here we count. 1, 2, 3, 4, 5. It's a flat correction because you are an area weight trader. You know that it's 5 move that you're expecting here. It's a flat correction. So 5 move out, first component 1, 2, 3, second component 1, 2, 3, and now you have 1, 2, 3, 4, 5 down. The third component is completed. Here again, you will see that an area weight cycle is completed, or a mini area weight cycle is completed, and possibility that we may see a reversal. Practically speaking, I'm choosing that word carefully. Practically speaking, to using 8 as a number to time the market. All right. Sometimes you will see that it will work beautifully. Like here, you may see straight away the price will print 1, 2, 3, 4, 5, and then change of market pattern. Very, very, very important. 1, 2, 3. So you see, either a cycle or a mini cycle is completed. Wait. You are an area weight trader. The next move, if an area weight cycle is truly completed, the next price move will be an impulse wave or a trending fair, yes or no. But if the following move is not a trending fair, you know that the correction is not yet finished. But by using the number 8, as I explained it to you 100 times, you are going one step at a time, identifying the mini cycle and improving your market timing. This is about area wave analysis, secret of area wave cycle, revealed part 1. All right. So, am I over my 20 minutes already? 9, so almost there. So you see. So key point to remember: the number 3 represents corrective wave. So, all right, corrective wave can be WSY wave, can be more complex wave, can be a flat correction, can be a zigzag pattern, can be a double tree, a triple tree, all kind of corrective wave. That's one aspect. Can be just a price segment, 1, 2, 3. Can be 3 component or 3 segments. Remember that, very, very important. All right. 5, as a price move normally in one direction, 1, 2, 3, 4, 5, can also be 5 distinctive waves forming a multi-wave. All right. It's very, very important that after the trending phase, we see a rotation. Another thing that we can add to this is that 1, 2, 3, 4, 5, 1, 2, 3. So there is a trending phase, and then we see a rotation followed by 3 move down. If there is a trending phase or an impulse wave, and then we see a rotation, okay, and with that rotation is followed by 1, 2, 3, we will expect a reversal. We will call it a mini cycle, or a cycle is in place. If you have any question or suggestion, put in the comment section, and in due course, I will be recording another video to answer your specific question. This video has been truly useful to you. Let us know by giving us the thumbs up. If you dislike it, mark it down. If you think this is an essential tutorial, feel free to share with your friend on Google+, on Twitter, and also on Facebook. If you have not yet subscribed to our channel, please subscribe to our channel today, all right? And make sure you click on the notification icon, so anytime we record a new video, you will be the first person to be notified. So this will conclude our discussion today about Elliott wave analysis, secret of Elliott wave cycle, reveal part 1. I will be recording part 2 and part 3, and when I will be sharing with you more secret about the Elliott wave cycle. Was it a secret or was it a blah blah blah? Let us know in the comment section. Have you already know about this? Yes, probably. Have you been using it? Maybe not. If not, well, it is a secret to you, and do something about it to improve your market timing. The market timing is so important. One can be a very, very qualified professional trader. If one is struggling with market timing, one can make a lot of trading mistakes. The difference between professional technical traders and the fundamental traders is that professional technical traders know how to time the market more accurately than the fundamental trader. Many companies that use the fundamental analysis usually outsource the market timing, demanding on professional technical traders or market analysts to help them time the market accurately, because one can lose a lot of money as one is holding position, a losing position, until the market starts moving in the right direction. It's quite painful, it's quite frustrating, it's quite stressful, and we don't want to get into that. And by using the number 8, as I explained to you today, you will begin to start seeing things clearly and making a better decision. Remember that the rotation of the market after 5 moves followed by 3 components, or 3 price moves, 3 segments, so important, or a corrective wave will help you to improve your market timing. Until the next time, enjoy yourself and be very happy. We are the TSTW24 traders talking about Elliott wave analysis, secret of Elliott wave cycle, revealed part 1. See you in part 2. This is an essential tutorial, and we recommend to traders to watch the full length of this tutorial. Happy trading to you all, and I will speak to you soon. 8 is a magic number. Or is it? No, it's not a magic number. There's no magic in it.